Nissan Joseph is the Chief Executive Officer at Metro Brands and now joins in on the show. Thanks so much for taking time out. I want to just start off by talking about how things have certainly opened up. We in our studios as well have guests sitting in. We're all present in our studios after a long hiatus. And with things resuming normalcy, what kind of demand have you seen and which are some of the key segments that you're observing that has seen good growth?
And thank you for having me here. Our demand growth has been happening since Q3 of this year, and we've seen it really across the board in terms of the categories that we sell, across the board in terms of the tiers responding to new demand. Of course, there was a little bit of pent-up demand in Q3, but we're also seeing that Q4 continues to hold itself well. And I think it speaks well to the consumer confidence out there that is happening in India. We're also seeing the continuing trend of the growth of the middle class incomes, which creates more disposable income that leads to aspirational buying, which Metro plays very well to.
And, we have noticed over the years that there's been a change in consumer preference. There's been more focus on the made in the premium segment that's been led by organized players. So what is your market share over here currently, and what do you see it growing to? And have there been any such observations that you've made as well?
Right, so we've seen a continued shift from the unorganized sector to the organized sector. I think it was started seeing a little bit more acceleration with the implementation of GST a few years ago, and then the most recent price hike that we've had for items under 1,000 rupees in footwear. So we're definitely seeing that shift from the unorganized sector into the organized sector. We're also seeing that as incomes rise, so do aspirations of consumers and their willingness and their desirability of premium brands and quality brands. So we're seeing a good shift to the organized sector, and Metro definitely plays strongly in that. As far as market share goes, it just depends on how you slice this very diverse country of ours, that it could range anywhere from 5 to 15% to 20%, just depending on how you sliced it, because everyone has a different consumer segment they speak to. But nonetheless, we're excited to also see that while the casualization of footwear among consumers has risen from the COVID times, we're also seeing good demand for our non-casual footwear, whether it be premium formal wears, and that could be just part of a closet refresh happening, or whether it's a continued demand for wedding and festive seasons as India comes back to celebrating weddings and other festive seasons. So it's very heartening to see that the demand is across geographies and across categories, and it's not limited to the casual sector.
But the one thing that's been, sort of dampening sentiments across, businesses has been the kind of spike up that we've seen in raw materials. I wanted to understand whether costs have escalated for you as well, and leather prices, which is one of the key components of your RMC, whether that has also continued to remain high. How is all the inflation around us impacting your input costs?
So we're in no way insulated from the market pressures and the market movements that happen. Just from a leather perspective, less than 10% of the shoes we sell are leather made, number one. But having said that, the rest of it is prone to some of these subject to these price increases that we're seeing. I wouldn't say they're vastly escalating. I think we have seen some increases in pricing. We are a B2C business. We are a DTC brand, direct-to-consumer brand. So a lot of times, if we are planning our forward-looking raw materials and stock well, we're able to mitigate some of these spikes that happen. And we've had these spikes happen for many, many years, caused by different things. GST was a big spike. Demonetization created some issues. So we have battled these things in over the period of time. In the long run, the consumer adjusts to that new set of pricing. We are in a premium segment, and what we're seeing is a dichotomous play in the haves and who has the money and where the income is growing, right? We also have forward bought inventory in anticipation of this price hike. This price hike we've been seeing it coming since the last few months. So we have forward bought raw materials to mitigate against it and to ensure that while it spikes, we're not impacted tremendously, and then hopefully we can level it out depending on whether we're able to pass it on to a consumer or we're able to source materials differently.
So tell me, what's been the price hikes that you've taken already so far, and whether you intend to take further price hikes given the recent spike up that we've seen in commodities?
Yeah. So we had a planned rollout of gradual price increases. You know, inflation is one of those things that's not new to the Indian economy, and we've seen that over a period of time. So, and that inflation number is actually driven by little bits of spikes through the years in different components of our industry. So we have already planned for these price hikes. We did have a little bit of price hike for our items of shoes that were under 1,000 rupees because the GST changed from 5 to 12%, but that was less than 13% of our overall footwear portfolio. So that wasn't the biggest impact. But we've been looking at about a 3 to 5% price increase, and it's just a very steady thing that we do because we have to keep up with inflation. And you know, when you hear the spikes, of course, there's a lot of attention drawn to it, and it could be sometimes disruptive if you haven't planned through it well.
What about your gross margins? Because they've seen an expansion in Q3, but given the increase in raw material prices, as you said, you've not been insulated from them. How sustainable are your gross margin levels?
I think after we came out with the announcement on our stellar gross margins for Q3, we did caution that it was going to be a little muted through Q4, primarily because, as we all know, in the Indian space, Q4 is when we run our end of season sales, and that's a great opportunity for us to liquidate our inventory and keep our inventories fresh. The price hikes that we've seen, we don't see that tremendously impacting our gross margins away from what we've guided to because they were planned, and we did forward buy into core items that we thought might see an increase that we also knew we'd see continued demand for.
All right, we'll let you go on that note. Thanks so much for explaining to us what the impact has been on the inflation front, as well as the kind of demand that we're seeing now that things have resumed normalcy.